Panagora, and Bill J. Kelly, the CEO of the Chartered Alternative Investment Analysts Association. They join us in person as we broadcast from the studio of Radio Cayman 89.9 in Grand Cayman and 91.9 on Cayman Brac and Little Cayman. Bill, Mike, welcome to Money Sense.
Thanks, Abel.
Pleasure to be here.
Morning, Amy.
They just came in. We were nervous that Emil and I were going to have to talk about machine learning, and we were a little nervous that we were not going to be quite as learned as you guys. So we're glad you made it, and welcome to Cayman.
Highly efficient.
I only have 2 jokes on machine learning. We'll see if I can fit them in. Bill, what is the core message of your presentation today at the Cayman Alternative Investment Summit?
So the overall theme of the conference is tectonic shifts, and I think it's a play on words with the moving plates of the Earth, and instead of TEC, it's TECH. And they're taking that theme into the asset management space. And with the advent of digitization and what's that doing to our space, and we're going to be talking about big data, machine learning, artificial intelligence. So the CHI Association is very similar to the CFA in terms of business model. We have 10,000 members around the world. They're charter holders demonstrating professionalism in the alternative investment space, where I think there's a huge opportunity for data to produce alpha down the road. So we surveyed our members in advance of CASE and asked them questions about allocation to alternative asset classes, their return expectations, and then clearly artificial intelligence, machine learning, what it means around ESG. And we got some interesting feedback. So we've got a all-Kaya panel. And for the very first time in CASE's history, we're going to simul-broadcast this across YouTube. So I'm going from radio to YouTube this afternoon, so we're really going to get our message out.
I think we might be on YouTube right now, too.
Oh, awesome.
So
That's
you're
great.
all day
okay.
star. So
all
maybe
right.
let's back up and talk about what are alternative investments, just for our listeners that aren't exactly sure what that term might mean.
Well, I think we're going to probably cover several definitions today, and the easiest way to describe alternatives is what they're not. And if I think about an investor allocating to asset classes, the traditional 60-40 portfolios, stocks, bonds, and then maybe a little bit of cash. As those asset classes have gotten highly efficient and highly correlated, meaning they move in tandem, a lot of smart investors are saying, what other risk premia can I access? So what other return streams that are uncorrelated? So here, hedge funds has come into the common vernacular in a big way. Private equity, real estate, infrastructure is a big play in this space, and then certainly commodities of all brands. So it's a way of really diversifying your portfolio to hopefully prevent catastrophic drawdown risk and to get a better risk-adjusted return at the end of the day.
It's that sexy stuff in your portfolio, right?
Well, I think there is a view toward that, but when people think about that, they think of opacity in terms of understanding the investment process, high fees, high leverage, and there's certainly plenty of that out there. But I think it's also for the smart and informed investor who's a Kaya charter holder, or maybe even a CFA, or maybe a doctor too, Amy. I think this approach is really necessary to think about how you can access this. And I think we're in a phase of the market where alternatives have grown dramatically, and the expectation over the next 5 years is 60% more growth. And I think the only way to approach these asset classes is through the informed lens of due diligence. Very, very important, and that's all we do 24/7.
We have a lot of doctorates in the studio. Dr. Amy, Dr. Mike Chen. I'm often referred to as Dr. Doom. But nevertheless, I want you to dumb it down for me, Mike. I want you to explain what your presentation is going to be about. It sounds amazing, but complicated.
Well, it doesn't have to be, right? So first of all, it's a pleasure to be here. So my presentation today at the Alternative Investment Summit is about, the brave new world, as I like to call it, the brave new world of machine learning or learning from data. But so that sounds very scary and opaque at first, but it doesn't really have to be. First of all, financial investments has always been based on, looking at data, looking at, for example, balance sheets, cash statements. You want to look at, what analysts think about a given company. So this historically has always been like that. What this term machine learning means, though, is that just now that the data is so much more, right? Mm-hmm. We really humans cannot really efficiently process all of these stuff. So it really is basically having algorithm to process it. But what's behind this algorithm, at least when Panagora does it, is we actually still based on fundamental human intuition, the stuff that makes fundamental sense. For example, if management's incentive and shareholder incentives are aligned, all else equal, you would think that over the long run, a company will perform better, right? So we just do this more systematically. And now machine learning is just another way of just the latest class of techniques that people use to try to learn from data.
That makes sense, but can you give us an anecdote or an example, something that we could really hold on to and understand of how that works? How do you get to an investment from machine learning?
Sure. Let me. I can speak from Panagora's perspective. So let me start describing a little bit about what Panagora is. So Panagora is a Boston-based quantitative investor. We have $45 billion under management. And we're all quant. Historically, the way we try to conduct our investment is that we first come out with an investment thesis. So a fundamental rationale, very, very much like what a fundamental analyst would think about when they make an investment decision. For example, you want to look at the morale or the motivation of a given company. If you worked in the workplace long enough, you'll know that if you work with a bunch of very motivated people, that will induce you to be more motivated and be more creative and trying to compete positively with each other. On the other hand, if you work with a bunch of people who are very not happy at their work, that affects the quality of your work as well, right? So this is a fundamental, pretty basic and intuitive insight. Then what we do is, okay, we have this investment idea. The next step is to go out and gather data, right? And what makes machine learning and alternative data and big data so powerful and so popular these days is that there's actually a very, very large collection of data that's available now for people to collect. So one example is there's a lot of these websites where you can go out and find how employees view their companies, right? There are all sorts of comments and ratings you can collect. So once we collect that data, the next step is to process and to try to make sense of it. Now, the data we collect sometimes are certain, depending on the data set, some of them are in the orders of terabytes, which is 1,000. 1 terabyte is 1,000 gigabytes. So it's a very large amount of data. So and a lot of the relationship within the data is nonlinear, right? So because of both the size and complexity of the data, we apply the machine learning tools to it. So, but at the end of the day, is still trying to distill fundamental intuition into extract alpha from the data set.
So let me see if I'm understanding. So basically your machines go out and they kind of scrape all that information of what people are talking about, how they're talking about it, if it's positive or negative, to kind of create what the sentiment is currently.
So sentiment analysis is certainly one class of problem we work on using machine learning.
And then it kind of makes a determination on what a trade should be, right?
Correct.
That would then, I guess, go against or for whatever that sentiment is, if that's what I'm understanding. Now, behaviorally, we know that people generally do the wrong thing at the wrong time. So does that matter into it if you're actually pulling from people? And do you ever, I guess, as the people watching kind of what the trades are going through, do you ever also get caught in that trap of, ooh, that's not what I would have done, but that's what the data shows?
So people do the wrong thing at the wrong time over the short horizon. If you look at, so just using the sentiment, employee sentiment example that we were speaking about, sentiment is a very slow-moving thing for a company. You cannot turn a company morale quickly on a dime, right? So that's more of a longer horizon. So that actually, in general, you don't have this what's so-called a reversal effect over a longer horizon. And also, one more thing is that with quant investment, actually, precisely because people do the wrong thing at the wrong time, quant investment takes a lot of the emotion of investing out of it. Right. So that actually is an advantage for quants.
We're going to take a quick break right now to get a word from our sponsor, but stay with us as in 60 seconds we're going to expand our conversation and delve into artificial intelligence with Bill Kelly and Mike Chen.
One TradeX knows there's more than one way to invest. OneTradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. OneTradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at OneTradeX.com. OneTradeX, the Cayman Islands' #1 choice for online brokerage. OneTradeX is licensed to conduct securities investment business by the Cayman Islands Monetary Authority.
Money Sense, the only personal finance radio show in the Cayman Islands, hosted by Simon Caudry from the CFA Society Cayman Islands.
This is Money Sense.
Welcome back. There's a joke here that Dr. Amy is dying to make about my artificial intelligence, but I'm going to sidestep that and go back to Dr. Mike. Artificial intelligence. Do you like that phrase?
So Simon, actually, I have...
Emil.
Oh, sorry. Emil. My apologies. It's
I'm less handsome.
Artificial intelligence, I actually do not like that phrase. Because, I think artificial intelligence conjure up all sorts of futuristic image. The most classic example being the Terminator, right? Basically, you're describing machines that are sentient. Machine learning is where we're at, and machine learning is much less than artificial intelligence. So machine learning, basically, as the name describes, you teach the machine can do what you train it to do, but it cannot innovate. It cannot do the things that it's not designed. It cannot think and cannot create on its own. So we're not there yet. I don't think we will be there in the near future. We might one day eventually be there, but I think artificial intelligence is too futuristic.
Well,
yeah, when we talk about artificial intelligence, is it more of that kind of idea of like what's in our Alexas or in our Google Homes or that kind of learns what we're doing, or is it kind of a Spotify model that learns what we like to listen to and adapts and continues to spit it out, or is it really moving towards that self-thinking situation, or even self-driving cars?
Yeah. So I think the definition of artificial intelligence is basically if a regular human cannot distinguish whether the thing or the entity it's interacting with is machine or human, then it's artificial intelligence. But right now, even for Spotify, for Siri, for Alexa, that is not artificial intelligence. It's machine learning, right? Because basically what it does is that they've seen enough responses to know that when you ask, hey Alexa, what is my weather? The machine in the back end knows that, okay, I'm going to go out to the weather station, check what the current temperature, what the current weather meteorological conditions are, and then go and report back to the user. But that's not artificial intelligence. Artificial intelligence, like you ask them to say, hey, I don't know how to solve this problem. Solve it for me. And nobody else knows how to solve this problem. They can figure it out, like what a human can do, right? So we're, again, like I said, we're not there. We're not at the stage of machines being sentient, being able to create new things. So that's why luckily I think there's still very much a role for human in the world, and especially in finance.
That's good to hear. There's still a role for us somewhere. Well, what are you investing in, I guess? And Bill, you can jump in.
So
there too.
I hesitate with doctors to my left and right to give a simplistic example of artificial intelligence, machine learning, but these are not new concepts. They've been around a long time. You think about the Tin Man and the Wizard of Oz putting a heart inside. So the concept has been there. I think the reality of it's relatively new. But the Hello Barbie doll, as an example, that has been programmed with artificial intelligence with 8,000 lines of response. So if you ask the Hello Barbie favorite color or something along those lines, it can process this and come back. And that maybe at the base case is artificial intelligence. Machine learning is when you ask that Barbie a question, it remembers what your favorite color is, what your birthday is. And similar to a Siri, they can accumulate this information so it can start to think and learn and reason and process without being specifically programmed. So that's where we move toward machine learning. But ultimately, and maybe some of the points that Mike was making a moment ago, and the name of this show, Money Sense, to be a successful investor, you need to have an information edge. And I think that's the biggest base case application of all of this data. I get up this morning, tweeted something out. That is a data point I left in the marketplace. Like something my daughter put up on Instagram, another data point. I went to the gym. My key fob logged me in. All of this data, structured or unstructured, exhaust data or real time, is being accumulated. And what's interesting, when I met Mike a few weeks ago, a lot of what I heard about using all of this data in the investment process was to take a dump truck, put it in the back office of an investment shop, hire a bunch of PhDs from Apple and Microsoft, and say, go make this data sing for me. I think what I learned a little bit in terms of Panagora's approach is that they start with the investment thesis and say, I'm thinking about this industry or thinking about this company, and here's a little bit of a blind spot that I don't fully understand. And if I could have some intelligent feedback from the marketplace about an answer to that specific question, let's go out and find it. So it was starting with the investment idea and then going out to see if there's some data to solve for it, as opposed to just ferreting through this data. And this has become an arms race with quantum computing to try to go through this. And eventually it's going to probably produce an edge. But I think right now, I think the alpha is probably resonant in some of these smarter questions to try to go solve for a specific information edge to make better investment decisions.
Bill, this sounds very high-tech and esoteric, but down at maybe the regular individual, regular investor level. Is there any sort of analogy here with robo-advisors and artificial intelligence? And are these machine learning programs going to be making investments for us?
Well, eventually they probably could, but at the base case, Robo is just putting an asset allocation mix in place for you. So I don't know if there's any artificial intelligence behind that. The one benefit might be that I think a lot of us, certainly in the States, we have our 401k plans as an example. And I think the benefit there is that a lot of investors have this money taken out of their check every 2 weeks. It goes into some back room and it's invested and it's kind of on autopilot. And the long-term investment nature of that, I think, is a big, big plus. I think as investors, most of us are market participants, not investors. And there's a big difference there in that a market participant is in and out, in and out. And you look at the month of December, we have 2018, one of the worst months in the last 10 years. Asset flows were very, very high. January, one of the best months in the last 3 years, asset flows coming out of 40 Act funds very low. It just shows the impatient nature of investors. So when I think about Robo, I think about the ability to form maybe a diversified asset allocation mix and have that investor across many, many different asset classes. But it's interesting, you talk about Robo as being a big disruptor in this space, and there's a few firms out there like Betterment and WealthPoint. The two largest asset gatherers in the robo space are Vanguard and Schwab, names that have been around for decades. So I think it's going to be a combination of some new players coming in and disrupting, and you've got to be mindful of that. But I think the scale business of some of these massive players, and Vanguard clearly has been a net recipient of assets, more so than any other asset management firm out there. They have the scale and the foresight to think about this next generation of investors. And clearly, last point, I've got 5 kids. 4 of them are probably considered millennials, and they are tech natives. And their comfort level with tech is much different than mine. Their concept of privacy is much more different than mine. So I think we've got to anticipate this as the current stewards of these businesses, because the consumer is going to want something very, very different tomorrow than they do today.
My dear audience, we're going to take another commercial break, but stay with us as we're going to take this show about machine learning, artificial intelligence, and alternative investments all the way home. So we'll be back in 60 seconds.
One TradeX knows there's more than one way to invest. One TradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. One TradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at OneTradeX.com. OneTradeX, the Cayman Islands' #1 choice for online brokerage. OneTradeX is licensed to conduct securities investment business by the Cayman Islands Monetary Authority.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by OneTradeX.
And now, more Money Sense.
Welcome back to Money Sense. We have a caller on the line with a question.
Yes,
Good morning.
Yes, good morning. Are you hearing me?
Yep.
Loud and clear,
Go
sir.
ahead.
All right. It's interesting hearing you all talk about artificial intelligence. But artificial intelligence, as far as you look into the technicalities of all these things, is floating around in the air all over the place. But the basic artificial intelligence or intelligence is between our ears, your ears, my ears, the populace ears. But the question that I have, how safe is this artificial intelligence? And I kind of come at you from a point from 60 years ago, being involved in an operation out in the Mid-Pacific, where intelligence and cyberspace, was kind of in its infancy, but a lot of things that was learned out there. But all this artificial intelligence that you all are talking about, this one gathering, orange gathering, or teeth gathering, or robo, or whatever it is, how safe is that in the kind of environment that we're operating on today, cyberspace?
So this is Bill Kelly. Thanks for the call and the observation. At the beginning of this presentation, Emil had asked me about my panel, and one of the things we are discussing is data ethics. And I think it plays into your question. I'll turn it to Mike in a second to talk about maybe some of the more cyber risks. But data ethics has been a forgotten piece to this puzzle. This is the brave new world. The concept of privacy is being rewritten in real time. We have laws being put in place in the Eurozone around data privacy and what it means. And access to this data and who owns it is clearly undefined. And not too long ago, there was this concept of these expert networks where you had doctors and lawyers and engineers and other professionals that could be hired guns to give you insights to a specific industry or a specific company. It was not in the public domain, and companies were paying for this information. If you go look up the definition of insider trading, it is something of value not in the public domain. So I think we as professionals have got to self-police as we think about the advent of all of this data, how it's being used, because perhaps not to call a specific question, but I think this is a very big umbrella over this issue, that this is all new. And if we think the regulator is going to solve for this, they will by enforcement action, and that's a horrible value proposition. But maybe I'll turn it over to Mike to talk about some of the concepts of what this means from more of a cyber and a security risk standpoint.
Yeah, so thanks for the question. I agree with you. So I think, again, I don't really like the term artificial intelligence. Maybe it's technical nitpicking, but to me, is what Turing test is basically asking, right? If you cannot, for a reasonably smart human, if it cannot distinguish whether the person it's interacting with is machine or biological human, then it's not artificial intelligence. So what I like to use is the term machine learning. Now, machine learning is actually much less grand and much less futuristic than artificial intelligence. Machine learning is basically you teach which patterns or which inference to make from data, right? But the back end of that is that it's still human has to teach algorithms for that. So to the extent that there could be cyber or security risk or data privacy issues, it's not really the machine or the algorithm that's making those things that's doing these back acts. It's actually the humans that's teaching them. So I guess this kind of makes it. I mean, at the end of the day, yes, the new technology makes bad actors. It multiplies bad actors' power and reach and scope. But at the end of the day, the intent still comes from human. So we still need, we still need law in place and ethics boards and standards and enforcements to make sure that to try to weed out as many bad actors as we can, and also to really punish those bad actors when they do get caught.
Yeah, I think transparency goes a long way, and I agree with the caller in that I do think historically we have not always had the best record, especially when it comes to new innovations, until those laws kind of come on. But I do feel like we're in an age where there is a lot more regulation around data security. I know both on island and in the U.S., the regulations from the SEC, the regulations from SEMA are very, very specific about what you can post on Twitter as yourself versus your company, what's considered investment advice versus your own opinion. All those things are there. So I do think we're at least in a good place, and I think the innovation is to be celebrated.
And just to add to Bill's point, so I do think that industry needs to self-police. So European Union obviously passed the GDPR regulations last year. At Panagora, we get calls from a data vendor all day long, and our compliance is very strict. We do not use any data sets that has any possibility of getting individual or either explicit or inferred information. So the industry, and I believe our competitors are doing the same as well. So I do believe that industry are self-regulating. Industry is, but there certainly could be bad actors out there.
How did you get into this industry, by the way? Do you start with tech and then go into finance, or you start with finance and go into tech?
So, yeah, it's interesting, actually. So I did a PhD in applied mathematics. And I have two career options, whether go into academia or I can maybe, write papers where 10 people will read them, or I can go into...
That'd be an improvement on my readership.
Absolutely. None of my papers have 10.
Or I could, trying to go into finance and, trying to have a larger real world impact. And as I got more and more into finance, I just find the financial industry is a really, really interesting area to be working. Both, I mean, obviously, from a compensation perspective, but from an intellectual perspective is very rewarding too, because the financial market, if you think about it, it's the most complicated system in the world, right? It's made of 7 billion sentient beings all day long. They're making economic decisions, and you're trying to figure out what's going on. So it's just a massively interesting and challenging problem.
I want to thank our caller. We have only a few seconds left. If I could ask for 1 to 2 to 3 words of what your presentation is going to be about, the key takeaway.
Max 3 words.
Yes.
Be informed, be ready. That's 4.
4.
Sorry.
Dr. Mike?
So
you can use 5.
Okay.
6.
We should embrace change.
Very good. Very good. Well, I suppose as with all technologies, it's in the hands of the beholder, right? Humans can use it for good or bad. Perhaps this artificial technology, artificial intelligence, will make its own decisions, but that's sometime in the future. For now, we'll be using it for our advantage for investments. And unfortunately, we are coming to the end of our show. Dr. Mike Chen and Mr. Bill J. Kelly, on behalf of Dr. Amy, I thank you so much for joining us and sharing your insight and perspective. You just listened to Money Sense. You can re-listen on the CFA Society Cayman Islands webpage, and you can send us show ideas at moneysense@cndw.ky and via Twitter at Money Sense Radio. Thank you to our sponsors, our caller, and thank you, audience, so much for listening. We'll be back in a fortnight with a new episode of Money Sense.
Money Sense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.
Good morning, Grand Cayman. The time is now 8 a.m. and brought to you by our friends over at Price Right.
Price Right is Grand Cayman's warehouse shopping superstore, making your dollar go further with huge savings and no membership fees. Get more of the things you use every day at the right price. But it's not just grocery and health and beauty. Price Right has a full range of products from office to automotive, patio furnishings to kitchen appliances, and even electronics. And since warehouse prices mean savings for you, everything is priced right at Price Right, Grand Cayman's warehouse shopping superstore.
The voice of the Cayman Islands.
89.9 FM in Grand Cayman and 93.9 FM in Cayman Brac and Little Cayman.
Silver wings shining in the sunlight.
Radio Cayman.
Access to information. Your community. News and information. Radio Cayman is your choice, your voice.